I'm Michael Wyrsch. I'm the Chief Investment Officer at Vision Super. I'm here to give you an investment update, and I've been asked to address three questions today. So the first of those questions is, what are the main factors currently affecting investment markets? So the prime factor at the moment really is inflation. And so we started to see some inflation pressures last year. They dramatically ramped up early this year, and we saw central banks respond to that by starting to raise interest rates for the first time. And we've had the US Federal Reserve raise rates, we've had the RBA raise rates, and that not just by 25 basis points or 0.25%, they've raised it by up to 0.75% in one hit in the case of the US. So we've seen dramatic raising of interest rates. That's impacted on markets, both bond markets and equity markets. The US equity market had its worst first half of a calendar year for 50 years, and the bond market as well in the US, I think it was around 49 years since they had such a bad start to the year. So it's had quite an impact, and really what we've seen is a revaluation of pricing based off where interest rates are. There are other factors that have affected markets. We've seen a number of lockdowns in China which have concerned the markets and led to some supply chain issues which fed into inflation. The war in Ukraine has had an impact on energy prices and on some other commodity prices such as wheat, which have had significant impacts in some parts of the world. So all of those things have added to market impact, but the main factor at the moment, we'd say, driving markets has been expectations about inflation, interest rate rises, and what may follow on from that. So the second question here is, what is our outlook for the next 12 months? So with that backdrop of what's been driving markets, we think it's going to be a fairly tricky 12 months. You never know in advance. We've sort of said in the last few years that we thought the next year would be tougher after some very good years. We think that continues to be the case, and maybe it plays out, maybe it doesn't. The rate at which central banks have been raising interest rates often means issues can arise in markets where you might not expect. Now, having said that, we've seen earnings continue to be very strong. Most places, unemployment levels are very low. Savings after fiscal stimulus are better than they've been in the past. So they're all positive factors for markets. But the way central banks are raising rates, we think will maybe cause some problems and potentially cause a recession. There's a greater risk of recession in some countries. Certainly not certain, and we will note that asset prices are a lot better than they have been, even 6 months ago because of the fall in markets. So we're expecting a tricky 6 months, a heightened risk of recession before things improve, would be our view currently. The third question is, how is the portfolio currently positioned? Well, it always depends on which portfolio you are talking about, but our balanced portfolio is just that, it's balanced, so it holds a number of different asset classes, and it always will, irrespective of our view. But we do position it for the environment we see coming up. Currently, we are slightly or modestly defensively positioned. We see that the medium to long-term outlook for equities is actually a lot better than some other asset classes. We think we have to negotiate a trickier period in the short term. We'll continue to monitor that. We're more favourable than we've been in a long time on bonds, so we've shifted back quite a bit into bonds because yields have gone up quite a lot. When yields go up, prices come down, but that's a lot of that's already happened, we think, and we're getting a better return now on bonds than we have been at around 3% per annum. Doesn't sound like much, but it's a lot better than 1%. And if we do get a recession, we'd expect those rates to drop and returns to improve. So we are modestly defensively positioned at the moment. And that's my update for today. And I look forward to talking with all of you again shortly. Thank you.